Now we have a numerical on working capital estimation. A Limited sells its product on gross profit of 20% on sales. The following information is extracted from its annual accounts for the year ended 31st March 2018. Sales on 3 months credit basis rupees 40 lakhs, raw material rupees 12 lakhs, wages 15 days in arrears rupees 9 lakh 60,000. So this means that rupees 9 lakh 60,000, it is the wages amount for the entire year, and out of this amount 15 days wages are in arrears. That means 15 days wages are wages outstanding, and outstanding expenses are current liabilities. So wages outstanding for 15 days will be a current liability for the firm. Next is manufacturing expenses. They are 1 month in arrears. Now manufacturing expenses for the entire year is 12 lakhs, and out of this 12 lakhs, 1 month's manufacturing expenses are in arrears. That means 1 month's manufacturing expenses are outstanding. So manufacturing expenses outstanding for 1 month, that is a current liability for the firm. Similarly, administration expenses for 1 month, it is a current liability. 1 month's administration expenses will be outstanding, and the total administration expenses are rupees 4 lakhs 80,000. Sales promotion expenses payable half yearly in advance. So we have 2 lakhs as the sales promotion expenses for the entire year. We can calculate half yearly sales promotion expenses, that is 1 lakhs 6 months expenses, and that 6 months expenses are payable in advance. So we have prepaid expenses over here. Sales promotion expenses are prepaid for the time period of 6 months, and prepaid expenses are taken as current assets for the firm. The firm enjoys 1 month's credit from suppliers of raw material, and it maintains 2 months stock of raw material and 1.5 months stock of finished goods. Cash balance is maintained as rupees 1 lakhs as a precautionary balance. Assuming a 10% margin, find out the working capital requirement of the company. Cost of sales for computation of debtors and stock of finished goods may be taken as sales minus gross profit as per the rate of gross profit given. Now we'll continue with the solution. First up, we have Now we'll continue with the solution. First, we have statement of working capital requirements. We have particulars, details, amounts. Now, working capital is current assets minus current liabilities. So first we'll calculate all the current assets, we'll add them up, and then we'll subtract the current liabilities from the current assets in order to calculate working capital. So firstly, we'll start with current assets. The first current asset is stock of raw material. Now, raw material, it is given in the question that raw material is 12 lakhs and the firm maintains 2 months stock of raw material. So 12 lakhs is for the entire year. We can calculate 2 months stock by multiplying it by 2 and then dividing it by 12. So 12 lakhs into 2 by 12, 2 lakhs is the stock of raw material, which represents 2 months stock of raw material as current assets. The second current asset is stock of finished goods. The finished goods stock is to be kept at cost price. Now we have the total sales given as 40 lakhs and gross profit margin is 20% on sales. So 20% of 40 lakhs is the gross profit. The remaining 80% will be the cost on sales. So firstly, we'll calculate cost of sales. We have 40 lakhs as the sales multiplied by 80%, 32 lakhs amount, that will be the cost of sales. We need to find out stock of finished goods at cost. So 40 lakhs is the sales price and it includes profit margin as well. And we are given in the question that gross profit is 20% of sales. So 20% is the gross profit, 80%, remaining 80% will be the cost of sales. That 80% will multiply 40 lakhs by 80% to calculate cost of sales. Now, finished goods, over here, the company maintains 2 months stock of raw material and 1.5 months stock of finished goods. So finished goods stock is maintained for 1.5 months. We'll calculate this is the cost of sales, cost of the stock of finished goods. multiplied by 1.5 and divided by 12, we'll calculate stock of finished goods at cost. That will be for 1.5 months. The amount will be 4 lakhs. Next current asset is debtors at cost. So just in the same manner that we calculated the cost of sales, which is sales multiplied by 80%, which represents the proportion of cost in the sales part, we have 40 lakhs multiplied by 80%, which represents the cost of sales, multiplied by 3 by 12. Now herein, we have the sales are on 3 months credit basis. So 3 months credit means the debtors are given 3 months credit period. That is why for calculating debtors, we have multiplied it by 3 and divided it by 12. We've calculated debtors over here at 3 months credit basis. That is 8 lakhs. Next is sales promotion expenses, which are prepaid. We were given in the question that sales promotion expenses are payable half yearly in advance. So if 2 lakhs is the amount for the entire year, half year's amount will be 1 lakhs, and that is a prepaid expenses. So that is a current asset. The next and the last current asset is cash balance. In the question it was given cash balance is maintained at rupees 1 lakhs. So we have over here cash balance rupees 1 lakhs. We can calculate total current assets by adding them all up, and we have arrived at the total current assets to be at rupees 16 lakhs. Now next is current liabilities. We'll subtract these current liabilities from the current assets in order to calculate net working capital. The first current liability is creditors for raw material. In the question it is given, the firm enjoys 1 month's credit from the suppliers of raw material. So raw material is for rupees 12 lakhs for the entire year, and the firm enjoys 1 month's credit from the suppliers of raw material. That means the credit period for raw material is 1 month. 12 lakh is for the entire year. 1 month's credit period can be calculated. So 12 lakhs into 1 divided by 12, we have 1 lakhs as the creditors for raw material. Next current liabilities is wages outstanding. In the question it was given wages are 15 days in arrears. So we have 9 lakhs 60,000. In the question it was given that wages are 15 days in arrears. So we have 9,60,000 as the wages for the entire year, and we can calculate 15 days wages. We have 9,60,000 multiplied by 0.5 divided by 12. Wages outstanding is 40,000. Next is manufacturing expenses outstanding. Manufacturing expenses are 1 month in arrears. So 12 lakhs is for the entire year. We can calculate 1 month outstanding manufacturing expenses, which is 1 lakhs. 12 lakhs into 1 by 12, 1 lakhs is the manufacturing expenses outstanding amount. Similarly, administration expenses outstanding, we have total administration expenses at rupees 4 lakhs 80,000. We can calculate 1 month's administration expenses outstanding at rupees 40,000. Next, we've added all these current liabilities, and the current liabilities amount to rupees 2 lakhs 80,000. Now, for calculating net working capital, we subtract current liabilities from the current assets. So, net working capital will be 16 lakhs minus 2 lakhs 80,000, which is 13 lakhs 20,000. The question says, assuming a 10% margin, find out the working capital requirements of the company. So we have to take a 10% margin on working capital. 10% of working capital is 13 lakhs 20, 10% of 13 lakhs 20,000. This is the working capital calculated as of now, and we have to add 10% for contingencies. 10% margin is to be added. So we'll calculate 10% of 13 lakh 20,000, which is 1 lakh 32,000. We add it up. So the total working capital requirement now turns out to be 14 lakhs 52,000.